We are joined now by a prominent name in the oil business. It's Gary Ross, Chief Executive at Black Gold Investors. Gary, it's great to see you.
Well, thank you, Andrew. Nice to be with you.
Putin changed the rules of the energy game, obviously, in 2022 with that brutal invasion of Ukraine. Lately, you have been warning that oil would come under pressure. So we have seen oil dropping sharply from its highs of about $120 this year. What has caused that? Start off with that, if you would, Gary.
Well, I think the OPEC supply increases certainly played a factor, and I think demand is weaker than people anticipated, especially in China because of COVID. You know, they're ripping the Band-Aid off, and COVID is affecting mobility in China, and this will continue to be the case. So whereas last year we saw a pretty big stock decline, inventory decline in December, we're going to see nothing like that this year. So by the end of the year, stocks are all of a sudden they're going to be 100, 120 million barrels in OECD, higher than they were last year. So this, for the first time all year long, we're going to see stocks are a little more comfortable. They're still relatively low, but a little bit more comfortable. And this takes pressure off the market. And we're also looking, Andrew, at a sloppy first half of next year with all the central banks raising interest rates and COVID still a factor in China in the first quarter and economic growth slowing. I think we're going to see relatively weak demand in the first half of the year and relatively sloppy markets.
That's interesting. And so oil, it sounds like, I mean, price predictions are always perilous, but it sounds like oil will struggle to get to, say, $100.
I think so. In the first half of next year, it'll be very, very difficult to see that. I think OPEC's going to have to cut again. I think when they review the market in early February, they're going to have to make a decision that it's oversupplied by at least 1 million barrels a day. They're going to have to cut production probably beginning in March or maybe even February.
We keep hearing that shale is not coming to the rescue. The boss of Pioneer Natural, you probably saw, Gary, spurning the White House. The White House, of course, had indicated the U.S. oil companies were being unpatriotic for not ramping up production. Pioneer saying, no, I'm not going to do that to my investors.
No, I think, look, I think people have overestimated what to expect from shale. And I'm looking for 600,000-700,000 barrel a day growth in 2023. Capital discipline continues to be the case. And the companies are finding as they go into different zones that they've already sort of tapped some of these different zones with their initial wells so that they're seeing parent-child issues and the productivity is not as great. So all these factors are combining to reduce the expectation of what we're going to get from shale in 2023. So I think 600-700 a day is about all you can expect from shale oil, that is. I mean, there'll be some NGL. And I think, I think that's the best you can expect.
Now, we have seen this big drop in oil stockpiles in the OECD countries. You did touch on this already, Gary, but you don't see a further decline or tightening of the market in the near term?
No, because the decline has really been in the Strategic Petroleum Reserve.
Okay.
Strategic stocks, government stocks, they're down over 250 million barrels. And that's what's will lead to this build in inventory that we'll see by the end of the year. Because last December, OECD drew 95 million barrels. They're not going to do that this year, nothing like that. So that by the end of the year, we'll have 120 million above last year. Stocks will still be relatively low. It's in the first quarter that we can build a surplus of inventory, and that's why OPEC's going to have to cut. Now, the governments did draw down strategic reserves, and the U.S. is talking about replenishing some of those reserves in 2023. They've already announced that purchase of 3 million barrels, which is kind of peanuts, in February. But they have said in the past that they'll buy back 180 million barrels. Some of that will be in sort of canceled, congressionally approved sales that they already were supposed to make. They were supposed to make a 26 million barrel sale, which they'll probably cancel, and probably cancel some other ones. So that will be supportive going forward. We're not going to have the SPR releases that we had in 2022, which offset any potential impact that we were going to see from the Russian invasion of Ukraine.
I know this is political, but some critics have said, look, that strategic petroleum reserve was there to ensure America had fuel. It wasn't there to manipulate the price.
Well, that's right. But look, looking back, it was kind of a prudent measure. It kept prices did get as high as you said, Andrew, $125, and it did bring prices down, and bringing prices down at a time when the economies are weak because of central bank rate increases it helps the Fed, it helps the economy, and it will inevitably help oil demand later on because a lower price does have an impact.
What is your take on peak oil, Gary? I know it's a very complicated question. It depends on what models or what you put into your model. But do you think peak crude consumption could come this decade?
I think it could. I mean, there's peak consumption and there's peak production, both of which are vying for the in terms of its impact on the market. In terms of consumption, I think yes, it's very possible that by 2030, 2029, 2030, we can come close to peak oil production. But I think also keep in mind, Andrew, that OPEC spare capacity, a global spare capacity, was a mere maybe 1 million barrels a day earlier in the year. Maybe with the OPEC cuts, we're talking about 2 million barrels a day now. And that, just imagine Chinese demand down 1 million plus, coming back, growing 1 million, 2 million barrels a day by the second half of 2023. Then we go into 2024, even stronger economic growth coming out of a global slowdown. I think you can easily see we have peak production sometime in 2024, which could lead to very tight oil markets.